Hi there traders, this is Steve Miley, the market chartist on behalf of FX Explained with our regular weekly macro watch update, looking at the main geopolitical, macroeconomic and fundamental events that have impacted the markets over the past week, and then looking out to what to watch for in the week commencing the 23rd of March 2020. Well, the last week has been all about the US dollar. The US dollar surges in flight to quality, whilst the pound was the headline grabber with GBPUSD, the cable spot FX rate, pound versus dollar, hitting a multi-decade low. While the COVID-19 coronavirus continues to spread with a global surge in cases and in the inevitable fatalities. The still more aggressive spread of the virus in the UK, across European nations and also throughout the USA has seen multiple countries go into some form of a lockdown with restrictions on public movement and work from home rules enforced. Panic buying has broadened globally, reflecting fears amongst the general public, with the purchase of goods now being restricted in many countries. Further interest rates have been implemented by multiple central banks around the world, with many rates now at close to or below 0%. Alongside interest rate cuts, many central banks have restarted quantitative easing programs, and in addition, governments in Europe, the UK, the Antipodes, plus both the state and federal governments in the US have all started to introduce various fiscal stimulus packages and protection measures. This is to try to protect businesses and workers from the inevitable economic slowdown that the restrictions will create. Global stock markets remain extremely volatile, with daily swings of 5 to 10% both down and up. But since mid-March, although most of the major global equity averages have probed to new bear cycle lows, most have not seen the aggressive bearish moves seen in the first half of March. Turning to the safe haven assets, global bond markets have sold off more aggressively in the past week, from record higher prices, low yields, moving to higher yield territory, with investors now liquidating all assets, even the safe havens, possibly selling the good to pay for the bad. In the foreign exchange space, the US dollar has surged against all major currencies, even against the safe haven yen, with dollar yen above 110, whilst the risk currencies amongst the majors, the Australian, New Zealand and Canadian dollars, continue to plunge lower, the Australian dollar at its lowest level since 2002. Moreover, even the sometime reserve currencies, the euro and British pound, have become casualties of the US dollar strength, with EUR-USD, euro dollar back below 107. But the pound sterling was the headline grabber last week, with cable GBPUSD plunging through the Brexit lows below 115 to its lowest level since 1985. On the commodity front, gold has pushed still lower, but somewhat stabilised in the past week, having sold off aggressively the prior week, again selling the good to pay for the bad, alongside being negative for gold given the US dollar strength. The oil price continues to push lower, with the WTI West Texas Intermediate oil probing close to $20 per barrel, unable to recover from its 25% plunge the previous week. WTI oil now at its lowest since 2002. And also in the commodity space, base metals have plunged lower, with the price of copper falling 20% just last week, 30% down from the early 2020 peak. So let's take a look into the week ahead, commencing the 23rd of March. Well, the European and US spread and deaths from the coronavirus remain the focus this week, plus the increasingly stringent containment policies put in place by governments will also likely impact markets. We're also going to be looking out for further central bank and government support for financial markets, businesses and individuals. And we're also going to keep a close eye on the overall functioning of the financial markets. Of particular concern remain liquidity pressures, particularly also in the credit markets. And finally, the oil price remains an important factor to monitor going forward. Any rebound in oil could ease negative pressures on global financial markets, but a further fall in oil could be disastrous for markets. The data remains somewhat irrelevant at the moment, but here we have the key data points going into this week. We are due to have the RBNZ, the Reserve Bank of New Zealand, and Bank of England on Wednesday and Thursday. However, given the recent interest rate cuts that have already been made there, potentially those meetings not going ahead, and maybe we're not going to get too much from those. We do have PMI data, which are probably going to be disastrous, coming through on Tuesday. We have US capital goods orders Wednesday, US GDP on Thursday, and US PCE personal consumption data on Friday. But as I said in here, the data far from relevant. We're really keeping our eyes on the spread of the virus. We're keeping our eyes on central bank and government containment policies and policies of fiscal and monetary stimulus going into this week. I'm going to wish you all a great trading week. I also want to wish you safety out there. Be safe. Take care of your loved ones. And I'll be back with you next week for another Macro Watch. Please do follow us on our YouTube channel, and I'll be back with you soon. Take care. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.